for any entrepreneur in China to think they're going to be able to have wealth outside China by selling to an American company, I think it was very naive. There was a moment when SoftBank was going to sell ARM to Nvidia for stock. That transaction today would make that stake be worth almost like $1 trillion. And that deal got blocked because China stopped it. Revenue ramp up is the only variable that matters, because then you can extrapolate Anthropic to being at something like 200 billion in a couple of years from now. At 10 times 200 billion, that's a $2 trillion company, and you're still getting at $1 trillion. What's going to differentiate company A from company B is the use of their internal data to create their own models, and the examples are many. CloudWalk's doing that, Nubank's doing that, Revolut's doing that, JP Morgan's doing that. Every single company in the world either is going to do that or be left behind. Getting to scale is the most important point. At the same time, you cannot fall into the trap of 2021, which was like, oh, let me just scale and then figure out unit economics and burn a shitload of money in the process. Because once the money dries, your business is worthless.
In a market like Brazil, how do you go from no revenue to 100 million revenue
because you're
within
replacing
like
labor. The services TAM is infinitely bigger than the software TAM. As a result, companies could get much bigger.
So you see the path from 0 to like 100 million within like 24 months for a company.
100%. It's already happening.
In LATAM.
Oh yeah, it's happening.
Welcome back to TGC Debrief. This is where we take the most important shifts in global tech and capital markets and break them down through the Latin American lens, because the context matters. And if you're building out of Latin America right now, you're not just competing locally, you are competing in a global system that is being reshaped as we speak. So every month, Paulo Passoni and I are sitting down to look at the key trends. And Paulo, it's so great to be back in the studio for round 2. Last time when we sat down for the first conversation, a big theme of our conversation was Plata's raising mega round. And I was asking you whether you think it's well-priced and overpriced. And almost immediately after we dropped the episode, Plata announced this huge round of $450 million at a $5 billion valuation, which makes it the most valuable privately held fintech in Latin America today. I got to travel to Mexico to attend the
I couldn't go, so.
Andrea Bocelli's concert. I did it for you.
Thank
it was
you.
wonderful. I fell in love with
the
classic
Middle East.
Actually, Middle East is the reason why I picked this up, because when I looked at Plata's cap table, obviously Valor Capital, congratulations. I heard the round was oversubscribed.
I say congratulations only when you make a good return. Investing is never congratulations. Investing is like, let's see what happens.
Somebody told me, the moment I wire the capital, I record a loss until proven otherwise.
That's right.
It's a
That's a good
mindset.
idea. Yeah.
But I think what really attracted my attention is that the cap table is not your typical VC cap table, although Plata was in a full position to do that and just to go the traditional venture capital route. And instead, they brought the mix, right, of growth venture capital like Valor. They brought Bicycle that has a very interesting dynamic strategy in terms of how they build their assets. But they also brought the Qatar Investment Authority in. So was it a strategy behind building the cap table in that way? And what's the rationale behind that in your
And there were also long-only U.S. funds. There were endowments in the U.S. No, honestly, I think it's all about understanding OLAG. And if you understand OLAG, you think this is the reason to invest and why you're excited about it. And if you never heard about Tinkoff before, and you never heard about what he did there and the quality, the way he did it, then you would run away because it's like a Russian founder. So that's literally why.
It's just a Russian founder. It's like the horrible Russian team, let me tell you that.
That's ultimately what it's about. And I think the more global, worldly investors that understand emerging markets, understand for a longer time, they actually seek to invest because of that. And frankly, it's about a certain talent pool that is, quote, mispriced in relation to the talent pools in the America, especially in Silicon Valley, which is the Russian talent pool or the Eastern European talent pool. That's a recurring theme. You can see that theme in 11 Labs with Poland. You can see that theme in Hicksfield, which is in Kazakhstan. You can see the theme in Plata, or we can keep on going in this world where it's very hard to find AI researchers and people with math skills to understand AI ultimately, because what AI is transformers and all this higher level math, which is required for you to understand and build these tools, at least for now.
Before the recording, I asked you to think about the main deals that happened in venture. And I think the most interesting thing that you came up with, and what I was thinking about, was the deal that actually did not happen.
Yeah.
On April 27, China's National Security Commission blocked Meta's $2 billion acquisition of Manus. And Meta announced it back in December. Manus had moved their HQ to Singapore, reduced China headcounts, hit 100 million ARR in 8 months. Would have been Meta's third largest acquisition ever, behind only WhatsApp and Scale AI, and everybody treated that as a deal done. What's your reads of that block from the Chinese perspective, but also from the long-term geopolitical implications of that?
Yeah. We lived in an interesting geopolitical world for almost 40 years, the world of global integration and trade. And now we're starting to live a new paradigm, which is separate ecosystems, the US-led ecosystem and the Chinese-led ecosystem. And for any entrepreneur in China to think they're going to be able to have wealth outside China by selling to an American company, that's never going to happen. I think it was very naive in hindsight that they tried to sell to Meta, and I think this probably stops other U.S. companies from trying to acquire companies in China. I think the world is going to look very different in 20, 30 years. There is a much more formidable competitor to the U.S. in China now in all sorts of fashions and ways. In some regions, there will be competition between these two powers. In Latin America is a case of a competition where Latin American founders and governments are going to try to optimize for their own good. I would say the U.S. is moving stronger into Latin America. First, we can see that in Central America and Caribbean. I do believe that will extend south over time. In that context, many companies that operate around the world are going to have to choose. Are going to operate and serve a half of the world or the other half of the world in a way. And the trickiest thing is for companies in Southeast Asia, because they're geographically under the influence of China, and that influence is only going to grow. And some countries like South Korea and Japan are super tied to the U.S., and they like the U.S. kind of style. However, geographically, they're under the influence of China, if not today, down the road. And lots of those companies are going to have to be forced to choose. You know, if they want to access the Chinese market, for example, there will be a trade-off in terms of aligning with what's best for China and perhaps at the detriment of the U.S. And the U.S., knowing that, needs to set up a complete new supply chain for all sorts of goods and services. And that's why you see this push into Mexico, push into industrialization in the U.S., which will be made feasible by robots and things like that, where costs will matter less. So we're in the beginning of a new world with a less clear one dominant force and power, and tech ecosystems kind of dividing along the lines of geopolitical forces. By the way, one thing that reminds me is there was a moment when SoftBank was going to sell ARM to Nvidia for stock. And I think that transaction today would make that stake be worth almost like $1 trillion. And that deal got blocked because China stopped it. So in hindsight, SoftBank really, they wish they had first split ARM into two arms, the China arm, and sell it for free almost to the Chinese, and then the rest of ARM, right? If they had done that, perhaps they would have achieved the right approvals and the transaction wouldn't have been blocked, or they could have done the whole thing differently. But that cost maybe $500 billion of value creation. So it's this thing of China blocking major...
it's not the first accident.
Yeah, it's not. It's going to happen much more often.
$500 billion.
At least $500 billion of value creation that would have happened had the deal gone through. I'd say the Nvidia thing was more relevant than Manus for Meta, but still relevant in the puzzle that Meta is trying to put together, right?
Yeah.
I think it's an interesting race right now where the leading horse is Anthropic, surpassing OpenAI, which is very busy with the lawsuit with Elon Musk and other issues as well. And Anthropic is running away right now with the prize. Anthropic is one of the few companies where they're doing a round and the secondary market is ahead of the price of the round.
Anthropic asked investors to commit allocations in 48 hours, right?
That's right.
And we're talking about $50 billion.
Mm-hmm.
What do you think about these timelines and timeframes? Is it Anthropic writing the sense of urgency because OpenAI is distracted in court right
No,
now?
it has to do more with their revenue ramp up, which is now almost.
But 48 hours for 50 billion.
I know, but like people just believe the revenue is true. It's probably true. There's 99% probability it's true. And if you believe that revenue ramp up is true, then nothing else matters. It's the only variable that matters because then you can extrapolate Anthropic to being at something like 200 billion in a couple of years from now of revenue. And at 10 times 200 billion, that's a $2 trillion company, and you're still getting at $1 trillion. So that's.
I mean, at that scale of thinking,
Yeah.
it's basically
more or
buying
less-
and cheap,
Give or take, that's what people are figuring out. But things could change. We're very early. This is like internet in 2000, like whatever. Like to predict whoever is going to win or not long term, as of today, it's very hard. You have higher probability horses like Anthropic, but who knows? Even them could be disrupted down the road.
Couple of questions. Have you ever seen a round where a secondary market is amplifying a valuation higher than it is on the primary markets?
Good question. Yes, I have seen that before. 11 Labs, we got calls from brokers offering 30% more the round price for shares if we wanted to sell. This happened within a week of the announcement of the round. So it's happening. It's happening.
Now, the second part, if Anthropic were to be disrupted, obviously chances are not like super high, but if you were to think about that as a thought exercise, who would be in a position to do it and why would it be possible?
Good question. I mean, the first answer would be something like Google, right?
So you would not name OpenAI. That's the first answer.
If they get their act together in terms of people, I think it's possible. Or if they shift their focus towards enterprise much more and consumer. Consumer, the unit economics is very tricky. Plus, you're going to have to build a advertising engine to monetize the consumer side. And that is a challenge in itself. It's not easy to do. It could happen. It could be OpenAI. What else? Musk, he's revamping X.AI from the ground up, but he's never a player to be forgotten in any race. So
He's always a dark horse.
no, he's very smart and he has something that is unique. Like every smart little kid wants to work for him, right? Like think about it. It's a very strong asset because you want to be around him because you're changing the world. And, there are few people in the world that is better than him at doing that.
Is there like escape velocity at which you think Anthropic's market position is as protected as, for example, Google's position was in the era of search?
It's totally different because Google's had a network effect in search. So the more people searching made the search results better. And here, I'm not sure that exists. What exists is you have more resources to train more verticals and get better tools shipped out of the door. But other companies in the world can focus in just one little thing and get a better quality tool if they're agile and nimble. So I'm not sure I see the data moat or the network effect yet on the
It's
business
actually,
model.
I think yet is an interesting word because just yesterday, within the minutes of each other, both Anthropic and OpenAI announced the same thing, that they're getting into joint ventures, and Anthropic launching an enterprise AI services firm with Blackstone, Hellman and Friedman, Goldman Sachs, General Atlantic, Apollo, GIC, Leonard Green, and Sequoia, each putting around $300 million. And OpenAI is finalizing the deployment company called DeployCo, anchored by TPG with Brookfield, Advent, Bain, Guana, and 19 investors total. $10 billion valuation. P Consortium is putting $4 billion. OpenAI is putting up to $1.5 billion of its own capital and is guaranteeing the PE backers a 17.5% annual return floor over 5 years. What is your take of that development? How do you read that?
Yeah. First, where is the moat going to come from in a lot of companies? So if you are trying to disrupt a certain industry, you're going to have to train your own model under the same techniques as a LLM, but for your business goals. However, to train a model, you need lots of data points. If you're an existing business, you have been collecting data for the longest time, you have the raw materials in theory to train a model, to get to that kind of moat faster than a startup that needs to first scale, to then get all these massive data points, to then have a moat. I think using agents or LLMs, it's par for the course. Like, that's not going to differentiate company A from company B. What's going to differentiate company A from company B is the use of their internal data to create their own models. And the examples are many. CloudWalk's doing that, Nubank's doing that, Revolut's doing that, JP Morgan's doing that. Like, so many companies are doing that, but every single company in the world either is going to do that or be left behind. In most businesses, okay, not all businesses, because if you have a port, you have a port, it's a real asset. That's a different dynamic. But this is kind of the playbook a little bit on the private equity firms. They have a lot of businesses that can monetize their data, but having access to the talent pool and the tools is a question, because what people don't understand is, like, we're going to be short computing capacity in the next 3 years because of this wall of demand coming to all players, OpenAI, Anthropic, and you name it. There's a wall of demand. There is not enough supply in the next 3 years. So what are these deals? These deals are a way to basically provide financing or secure revenues for these labs over many years so that they can actually, in fact, have predictable revenue. And if a good CFO comes about, even borrow against that stream of revenue to fund the infrastructure side. I don't know if you saw, there's another interesting news. The very interesting team inside A16Z that invested in infrastructure, AI infrastructure, i.e. data centers and all that, left. They created a fund, a venture fund. The way they're going to monetize the venture fund is by showing up with capital in the round, but also capacity on data centers, because capacity is scarce. So in a way, this deal between private equity shops and these guys is the same idea, yet again. The team that left A16Z is playing that in the VC world, and these private equity shops are playing that in their own industries. There is a window of 3 to 5 years for all the traditional private equity kind of companies to adapt to the new technology tools. And once again, not all businesses are going to be disrupted equally, but if they don't adapt, then they know they're going to be holding an asset not worth much. And if you think about the horizon of investing of a private equity shop is about 5 years. So if they get hit on the exit value, then they could be impaired in many businesses. So this move makes total sense by the private equity shops. It makes sense for the labs as well, because you are more or less securing revenue for multiple years.
Quite, you also launched, what is it called, the Frontier Fund, which is focused on fully funding the physical data center infrastructure. I think it goes along the lines of what you said.
I was talking to a founder. They want to do a round, and the round is to buy Nvidia chips and to build their own data center, to train their own model. The biggest challenge is securing the Nvidia chips. Second biggest challenge is building the actual physical data center. It's actually harder than raising the money. There's a huge debate if you're a company. Do you rent?
Or do you build?
Or do you own? Right? Generally, you want to rent. If the market for infrastructure is well balanced, you want to rent. But if you're going to go through a period in the next 5 years of massive demand outstripping supply, and that period determines who wins in the end of the rainbow, then I think there's a case for owning. I don't think this case for owning is going to be the case for the rest of the company's life, but it might be a strong case in the next 5 years.
When you think about this dynamic of collaboration and the very deep integration between companies like Anthropic and OpenAI with very traditional portfolios of very traditional private equities that have a huge exposure to companies, what does it actually do to the application layer thesis?
So if you hand all the Claude tools and OpenAI tools, Gemini tools, and so on to a Fortune 500 employee, they cannot actually do much with it because it's actually complicated to use from their points of view. So a lot of the application companies are making it easier to deploy. And then the smart ones are wrapping themselves around the customer in a way that the customer will be very hard to rip it off down the road.
Can you give an example?
If you have all the integration with the core ERPs, with all the systems of record, you have an easy to use product, you have adapted the product to the customer with so-called forward deployed engineers, a fancy name, but it's what basically the tactics that Palantir kind of started. Then it's very hard for the customer to rip you off and put another solution in place, right? It's not easy to do this kind of thing. So you're only going to do that for large customers. Then you have mid-sized companies and small companies that are going to be served by off-the-shelf solutions because it will never pay off to do that. But still, on the mid-sized companies and small companies, what I think will happen is one system that runs your entire business for you. So before, you had the system that did your revenue, or a system that control, your process flow, like orders for a restaurant. Then you have your accountant, and then you have, your banking solution. I think in the future, because code is so much cheaper to produce and much faster to produce, you might have one system for the entire A to Z operation of a small business and mid-sized business. That if that's the case, then it becomes a little harder for you to switch. You could switch still, but it becomes a little harder to switch. And the value for the money that you're going to get from the service is going to be infinitely higher than yourself hiring 6, 7, 8, 10 solutions and then patching it together, because all the data is going to be used smartly in your favor. And then the question will be, if you are using that smart system and your competitor is not, you have an advantage, but then that will go to everyone. Everyone's going to have the same system. And then ultimately, what's going to matter is your food better, or is your customer care better? It's the things that are left for you to do as an entrepreneur, as opposed to the infrastructure of running your little business.
Do you already see the companies that have a potential to become this widely adopted within specific customer segments?
So that's the opportunity for something like Toast. Toast could be like one of the most interesting players, because if they can ship a lot more product and go way deeper and do the entire thing A to Z, and you run your entire little restaurant on Toast and you don't use anything else, and then the next step is for Toast to provide you even with the marketplace kind of wholesale deliveries of food products that you need to create your output.
Toast is very interesting, and they were built like proprietary for the restaurant industry. But when you think about players like DoorDash, like Uber Eats, like iFood, those that touch, different elements of this like ecosystem around restaurants and delivery and so on and so forth, what could be their strategy, and whether they're
so
plans
iFood
to
for sure was going to try to be the Toast plus the Uber Eats, they're going to try to do the entire thing.
I mean, Uber Eats there already.
Right. So that's what I'm saying. Like, I think the competitor might be exactly the guy who brings you the demand, who now also gives you the system of record and the operating system. The whole problem with all that is now you become extremely dependent on that platform. And when that happens, usually you get squeezed, right? Because the platform will figure out exactly how much profit they can extract from you, and you're just an input cost for the platform. So you need to exist, they need to keep you alive, but they can crank up your take rates and make you more or less of a slave of that platform. So I'm sure that's how Toast markets against a move by like an Uber Eats to offer the same platform.
Okay. Toast and Uber Eats in the US, but where do you see the similar dynamics happening if you talk about iFood, for example, in Brazil?
So iFood is going much deeper already than the delivery apps here in the US, because they have such a dominant market share.
Yeah.
And they have less competition by the Toasts of the world, the equivalent.
Well, now they have Chinese players, but they're competing purely on a delivery, like part of the...
Right. So the Chinese players are perhaps the biggest threat for iFood, which is interesting because, Prosus owns a huge chunk of Tencent. So that in itself is ironic. But yeah, all that is relevant also for the original conversation, geopolitics, because if the Chinese are dominating the food delivery and they're selling the cars and motorcycles to the delivery people and all that, like now they have so much.
Now they also have the EV infrastructure
Yes,
and EV vehicles.
that's very dangerous. Then at one point, China might, kind of own your consumer infrastructure in Brazil. Like, think about that for a second. On the short term, you benefit a lot because the cars from China are better and cheaper. For the restaurants, it might be cheaper and better, but like at some point, you might be in a very delicate position geopolitically.
That is the most interesting thing because, I've been looking at China in Brazil for quite a while, especially because, you and I were talking to, and I think like even during our first episode a couple of years ago, you said that US is making a mistake, not watching closely Latin America
Yes,
and not
and
figuring out
they
the
realize
strategy
it
in Latin
now.
America.
Yeah.
We should talk about that. But I think what is interesting and what China is doing really well in Latin America is building infrastructure and controlling infrastructure. And you can see that in energy, you can see it in retail, you can see it in EV.
So they built a port in Peru. They bought a lot of infrastructure, electricity infrastructure. They even tried to buy Panama Canal. The Chinese know how to build better than anyone else infrastructure. Like they're incredible at it. I think what's gonna end up happening is case by case, countries are gonna optimize what's best for them. Geographically, I believe the Americas are gonna be influenced by the U.S. Just because geographically you're right below.
It's a very strategic.
It's very strategic
position for
exactly.
It's like something that you said about Southeast Asia that Japan and South Korea, they're big allies of the U.S., but at the same time they are strategically important assets for Japan, especially for China.
Yes.
I'm very curious about. I don't know if the super app is the right moment, but what you were saying about Toast, that Toast needs to become a super service providers for a specific industry. However, when you look at most of the attempts of companies to totally own the vertical stack within U.S. businesses, they all failed. And I'm curious, do you think it's, by the way, which is not the case in Brazil, for example, right, where you see companies are actually transitioning to this vertical stack. But here, like I've seen DoorDash now launched the restaurant reservations. And I don't know who uses that, but I still don't use it. Although it's easier, like normally you go, you order on DoorDash, you can, but you don't do it. You go to Resi or you go to OpenTable, and that's kind of my consumer behavior. Yeah. But I'm curious, do you think there are structural reasons to that? And if there's anything going to change in this AI era where it's becoming like a matter of survival for those companies to build this vertical stack relatively fast?
My mental model is, in the past, you would do a business and want to make money and getting paid to collect data from a customer at the same time. In the future, you might want to do a certain aspect of the business, quote, for free to collect the data, train your own models, and monetize in some other way. So if you're a loyalty scheme company, you might want to run for the corporate clients the loyalty scheme, quote, for free or at cost, so that you can really map out the consumers at a SKU level with high frequency data, so you can create products for CPG companies and for the clients, who exactly to go after. And then you monetize by success rate that is traceable. So easier said than done. All I'm saying is like very theoretical, but it requires extremely good teams and very technology-driven, data-driven teams to pull it off, and some courage by incumbents that might have those data points to go through a J curve. See J curve.
Love that.
Which is, at first, your revenue might drop, but the drop in revenue is essential because your customers are going to churn anyway. They're going to churn because they can probably build that tool with Anthropic overnight or within a week. So why not provide that at a killer price so that you can keep collecting the data? I think the same logic can apply to so many different businesses. In fintech, is the same, like payments. We have been talking about payments being, quote, free for the longest time because it's very data rich, but there's still like billions of dollars of revenue of data processing for merchant acquiring everywhere in the world, including Latin America. So in my view, AI is going to accelerate the demise of that revenue but that revenue will show up in other ways. Will show up as a loan revenue, or it will show up as a treasury management revenue, or will show up as a private wealth of the owner of the customer, or will show up as a insurance solution. I think it will show up in different ways. What matters, however, is to have the data to predict who to serve and with what product at what price. That is the raw material you cannot survive without. That's why I think this type of payment things, now they might finally go to zero. And I see this in practice, like you take a case of Yape in Peru, where they created a free payment Pix, almost like a private Pix. Now 20 million people use it, and they're monetizing that in loans. And in that case, also, there's an interesting phenomena, which is Yape is a utility for the population, and you use it so frequently and it's so essential for your day-to-day that if your access to it is cut off because you haven't paid a loan, you cannot operate. So you're going to do everything you can to regain access. It's like being blocked from a cell phone. You're going to find out a way to get a new cell phone because you can't really live without it.
Yeah, that thing will not go away.
Exactly. So I think I think that aspect of Yape, it was not something that was easy to predict, but it does impact risk on the lending side quite a bit, because it's you're paying your loan to retain access to the utility to operate your day-to-day life. So I think that's a very powerful.
There are
Powerful
more
thing.
examples that you brought in that little paper that you sent me
Yeah.
in preparation for this episode. I think it really makes sense to talk through them. So you brought the example of Nubank, you brought the example of Mercado Libre, and you brought the example of Pix.
Yeah.
So can you unpack those examples to drive the point home in terms of how you can use these data lakes, data modes, data access, and convert that into either improved efficiency or improved revenues?
So first of all, using data requires the data to be appropriate for AI use, right? In itself, that's a massive task. And the kids that built the AI model to train credit models that Nubank bought, their biggest problem on go-to-market 2 years ago was their clients were not ready. Their data was not ready. Nubank was ready. That's why Nubank bought them, because they saw the results from it. It was called Hyperplane, the company. But they realized
Is it the Lala company?
Yeah, Lala, there are 4 founders of
One of them
Hyperplane.
was,
One of them was a Lala kid. And now he's doing Frontier. The CTO of Nubank and him left. And they're still under stealth mode and trying to build a...
Can you just say one word about what Frontier is?
So Frontier, I would say, maybe trying to disrupt XP. I don't know, like that's the idea.
The wealth management.
Yeah, exactly.
I
don't even
team
know.
is very strong.
I don't even know what they're building, because I'm not sure they also know the answer. They're still building, and we haven't seen the product yet. So, and then we haven't seen the reaction from the customers to see exactly where this whole thing is going to end up. But
the team is excellent.
Yes, exactly.
Okay, let's go back to the Nubank and
Nubank,
Hyperplane.
So Hyperplane, the problem with Hyperplane is like half the banks in Brazil or in the world, CD, we're not ready to utilize these very advanced transformer models and whatnot to create better credit models. And they saw a massive uphill battle of years to get revenue, and they decided to sell as a result. And I think the same logic still applies, but now AI itself is cleaning data. So you have agents that can go through PDFs and unstructured data and make it structured data for you to then train a model. Still in the early days of this, but it's happening. I predict that in a couple of years from now, we won't have human beings going through the data and making it useful for corporates anymore.
It will be fully done by AI.
Fully done by AI. It doesn't matter how your data is, like they will figure it out. And when that happens, everyone can then train their own models, which is my point. That's the moat in the future. And what's happening is there is a window of time, because a lot of lethargic companies are not going to do that very fast. So that opens up a moment of disruption for a lot of industries, especially services. Like, services is the most potential, the biggest moat in the world. I mean, it's not me who coined this phrase, but services is the new software, right? Like everyone's going after these service moats that are gigantic.
Including Anthropic and OpenAI with their joint ventures.
Yes, but they have to be careful because, if they get too powerful for their own good, then people are going to try to regulate or split them up. Like they have to choose a little bit what to do and what not to do, because they could disrupt every single new startup coming up. But if they start doing that, then it's a little tricky.
It's gonna get up to Microsoft versus DOJ
You might.
situation.
I think Anthropic, OpenAI have the potential of being much more powerful than Microsoft. However, I'll tell you something interesting that came up last week. You're now in the Passoni and Friends group, and I shared this note. And if you saw this,
It's everything I read in the morning, for the record. Like I don't read any media or news anymore. Yeah. I feel like everything is being curated in this group.
So one person said Nvidia is moving strongly to build the software tools for people to build their own models without the need of Anthropic and OpenAI. Frankly, almost competing with Anthropic and OpenAI. That's interesting. I think that if they succeed in doing that, it creates some kind of checks and balances on this power thing.
Yeah, because right now they don't exist.
Right now it doesn't, because people are desperate. Like it's like this. Like 2 years ago, 3 years ago, when OpenAI launched ChatGPT, everyone's like, "Oh, nice," but like, what do I do with this? Nothing. Now, when Opus 4.5 was launched and agents became obvious that they are easy to set up, then everyone was like, "Holy shit! I have no more option not to try this thing and have a massive budget for this, because I understand now how I'm going to get disrupted." So you have all the companies in the world like panic mode. Like, I'll buy whatever you have at whatever price. I don't know even what I'm buying. Frankly, I think that's where we are.
Well, I also think we're sort of tipsy still, because we started to see the actual value. And it's like a little bit of an addiction. Oh my God, I like it. I want more of that. So we don't really think about the consequences of being that attached to a oligopoly, essentially, because that's what it is today.
But even in this oligopoly, there is specialization. That's what's happening also. We spoke about this in the last episode. So OpenAI is better at coding for iOS, and Anthropic's better for PC, and so on and so forth. And that's why Cursor keeps doing really well, despite being a rapper, right?
Yeah.
Everyone said, "Oh, you are a rapper, you're dead." Not necessarily. It depends. There is moat on the rapper, especially when there's a data loop. The clients generate data for your optimizer to then deploy in the right lab. So there is some logic into it, and I see this happening repeatedly. It happens with Higgs field, with Cursor, with Perplexity. There is some moat there.
What you said about Nvidia and services, it's really interesting, because I think, again, goes back to what we discussed last time, that larger enterprises will be more equipped to build proprietary models.
They have more data.
They have more
They're
data.
not.
Yeah, that's right.
Their culture is least equipped.
True that.
But they have the data. Whether or not they will mine their data before others make it completely irrelevant, because their data is not gold. Their data is only valuable as long as your competitor doesn't have
access to it.
No, or data that is equally valuable. But over time, they will have it. The data moat is not permanent. It's temporary. And then you got to build on top of that other things, right?
Okay, that is interesting, because first it was about LLMs, right? Yeah. Right now, it's about proprietary data moats and ability to leverage that to really move the needle in terms of your business, both efficiency and revenue. And what do you say the next step will be? What's after data moats?
I don't even think I know the answer.
How would you think about answering this question then?
I think like this. So if you want to provide a financial service in Brazil and you don't have at least 10 million customers, how are you going to have the data to price products appropriately? Very hard, right? So first you need to get to scale. And if you don't get to scale, there is no chance. And then once you get that kind of amount of customers, which by the way, interact with another 90 million customers. So when you have 10 million customers, You also have data on people that interact with your customers. So you now all of a sudden you see almost 100 million people. And then once you see 100 million people, you can go after them. But eventually, all players have that. So what's after that, right? I don't actually know the answer. I don't know. I would love to trust a financial agent that can alert me to problems I'm going to have in cash flow or optimizations I'm not doing that I should be doing, like literally making my financial decisions for me. There is a huge trust issue at moment zero. Like, do I really want to give all these AI agents access to my personal financial data? What if they get hacked? And what if I get hacked as a result of them getting hacked? What if they start making mistakes with my money? Like, that's probably the last part that I'm going to give access to.
Yeah.
I'm going to give access to my emails, not my emails that deal with my financial life, by the way, but my other emails. I'm going to give access to my workflows, no problem. If there's a mistake there, I can deal with it. But my financial life is probably the last part I'm going to give access to.
But I think it's something that you build. So you build your relationships with AI to the extent that you trust more and more. And I can give you an example. So you got me to use Comets. You were talking about how easy it is and how faster your workflow is. So here's what I did. I had a portfolio company that was just acquired by a publicly traded company. I never sold anything on public markets. I had no idea how to sell anything on public markets. More than this, I didn't really have, all of the documents handy. I didn't have the exact number of shares that I had. So I went to Comet. I said, how about go through the emails related to X, Y, and Z transaction, figure out what I own, figure out if the shares are restricted, figure out if I can sell, and if I can sell, what needs to be done for me to sell it. It took maybe 10 minutes for Comet to really go through everything, figure out the ownership, split the ownership by individual versus corporate, and then say, okay, this company, sometimes this company can allow you to sell directly. This is not going to be your case. You need to go to whatever Fidelity and open the brokerage account. Would you like me to bring you to Fidelity website and just I'm like, hell yeah. Oh my God.
By the way, the next step, which is going to happen a year from now, is you're going to have to figure out your cost basis. So for federal taxes, you can submit your tax return to Perplexity, and you can further optimize vis-a-vis your accountant. This is already now. A year from now, every single state and every single city will have a module for that. It will optimize. And, frankly, am I going to submit my tax to my accountants in the future or not?
This is actually a great momentum to talk about the radiology paradox. You sent this chart, the Radiologist Paradox, which is basically the context is that a decade ago, Hinton said, stop training radiologists. AI was going to read every scan. And what actually happened is on this chart, which is number of US radiologists going up, average income going up, both lines climbing in parallel. And now if you bring that to tax and accountants, what will happen with accountants? And how do you read this paradox overall? What's happening there? What's your take?
So let's think about the radiology thing. So if having a screen for some kind of disease was super cheap and fast, more people would do it and insurance would cover left and right, right? So what the radiologist paradox explains is that the volume of exams massively goes up when the cost per exam, which includes the analysis of the output, goes down. It's microeconomics 101. So what people were surprised is that because you're increasing the volume of these exams so much, the number of radiologists didn't collapse. It actually went up. And their income went up because they're being more productive. In the case of the tax prep, I'm not sure because I don't know what else my accountant could do for me.
I think it's interesting with radiologists because radiologists, the assumption was that it's a task, like reading scans, that it's not a job. But in fact, it is the job because you interpret in complex cases, liability, communication, decision-making, workflow orchestration. AI brought the cost of task down, but not the cost of job, right?
The quality of the radiologist went through the roof, right? That's the point. The same idea of software. Software did not permeate every corner of society, especially in the emerging markets. Now it will. Now it will.
Oh, wait, elaborate on that.
So software development was always bound by the number of the devs and the cost of the devs. So the organizations in the world that most use software was Fortune 1000 companies. As you go down and you become a smaller company, you use less software. And then as you go to an emerging market country, even worse, right? Because there is not enough income to pay for that talent. And that talent, it gets arbitraged away globally. So you have all people in Argentina working for tech companies in the US, but earning dollars and living in pesos. So
Arbitrage.
that arbitrage had been going on forever.
Yeah.
That's why DEO exists and all these other things, right? So we all know that talent pool, regardless of what they live, their price got beat up.
Yeah.
Point being that it was rather expensive to develop software in general terms. Now the productivity of those people is going through the roof, and code is going to reach more ends, corner cases and use cases everywhere. And we're going to, all the world that was analogic is going to become digital finally. That's going to happen in the next 20 years. It's not going to be overnight. It's going to happen many years now. So the demand for software developers might be very strong for many years to come, which is a little contradictory to the idea that, you shouldn't study software development. That's another example. And once something becomes digital, becomes data feeds AI, and feeds AI, the whole thing becomes more powerful also. Because the interesting thing about all the waves of technology, they all build on each other. And the reason why they're so powerful is because they don't compete with the prior wave. They just make the potential of the prior wave even bigger. We couldn't be here without the internet. The internet gave us data. The data gave us the current AI, right? And these are all like logical evolutions.
It's a ladder.
It's a ladder. And most of the difference is that most of these evolutions were oftentimes felt in the communication level, like data got organized and was easier to find information. And now it's a revolution in computing, which has a different property because it's much more powerful. Another example, how many movies in the world can be produced? Like producing a movie is extremely expensive. And now you can perhaps make some shots that are real and with humans, but then you can augment that with AI video content production, and you can drop the cost of producing a movie by 100-fold. And when you do that, you're going to have more movies being produced. Will there be demand for people watching those movies? I'm not so sure, because people are also, the problem of social media is that we're training people to react to short clips, and that better than anyone. But it's interesting because someone really talented in, I don't know, any corner of the world that has a talent for movies and can now produce a Hollywood quality movie from anywhere. That's an interesting thought.
That's how, that the thing that happened with music, for example, like Bad Bunny would not be where he is today if it was not for, the ability to upload tracks to whatever SoundCloud and whatever he used back then. So it's a natural progression, like you said, the ladder. But I think one thing that is interesting, and you can track that in time as well, everything used to be handmade, and people did not assign value to that. Then we got to the industrialization, and then people got sick of this industrial mass-produced products and started to assign extra value to handmade again. And I feel
we're back to handmade.
I feel like we're back to handmade, even in the movies and just in general. I like observing trends based on the behavior of Gen Z, because I think
so Gen Zs are buying what? Film cameras,
vinyl. Yeah.
No, I totally agree with that. I do think, however, one of the biggest problems for a movie maker is the cost of financing the movie production. And how do you prove yourself as a talent? Because there is a catch-22.
Yeah.
You only get noticed by the big budget funders if you have made some really good movie before that broke out.
Right.
But
right now distribution is not that concentrated.
But it's hard. Like who's gonna make a bet on you? So there's a catch-22. Maybe it's a way for a young talented person to create something that goes viral, that gets a lot of accolades with a low budget, and then they can go all like handmade
Yeah.
once they've proven that they deserve that.
Well, yeah, I think it's only catch-22 if you really think that there is this established structure and the length and whatever. But if you rethink that from the perspective of how, people consume content right now, what if the movies of the future is not a 90-minute, like, well-flowing,
Yeah.
like, story
Totally possible.
plot? It could be, but what if it's like 10 minutes concentrated version,
Yeah.
which is like a
But it's
fraction
so
to
funny,
produce.
right? At the same time, you have Acquired. The most popular business podcast on earth is
Yeah.
5 hours, 4 hours. Our episodes are
2
hour and a half,
hour and a half too. Yeah.
right? So, like, I understand. Like, I think what we're playing for here is the opposite.
The extremes.
We can make people aware of what we do by the short clips, but I think the people who really appreciate what we're doing are going to listen to the whole thing.
Yeah.
And they're going to listen to the whole thing because it's very human, it's fun, it's informative, you have a good time. It's a good way to kill your ride from Faria Lima to Guarulhos in the terrible traffic.
It's the pendulum swings right now in content, but in pretty much everything. The concentration is happening at the extremes because the middle is just like...
You don't want to be in the middle.
You don't want to be in the middle. Okay, I want to talk about the vertical applications AI in Brazil.
I was in Brazil for Enter, one of our portfolio
That
companies.
was my question. How was the Peter Thiel event?
Yeah, so they brought Peter Thiel. So first of all, why Peter Thiel is in Latin America, Argentina, Brazil? Why the heck bother with it?
One of my favorite philosophers in tech, I have to say.
Exactly.
And 0 to 1 is a must read.
Exactly. I always recommend that book as well. So, so there is a point of realizing that Latin America is relevant for the future of the U.S., which is a point that I've been talking about for repeatedly.
For a couple of years at this point.
Yeah. There is also a point of grabbing founders that are leapfrogging. The case of Enter could be one of those. It's early days, but that could be one of those. But there, I'll tell you something that was interesting. Even before he spoke, the team from Enter shared a very interesting graph. Number of lawsuits per capita in Brazil, which even before AI, before ChatGPT, was one of the highest in the world. Very litigious society, multiple reasons for it, big problem. But when ChatGPT gets launched, the graph goes vertical, right? The much higher number of lawsuits filed against enterprises. Why? Because AI is making lawyers that file those lawsuits more productive, just like the radiology exam. Same thing.
I did not realize.
Yeah, it's the same thing. Now, if you are a large company, you're getting now bombarded by these things. You were already bombarded before. You already had a big team to deal with this nonsense. But now you have even more, like you're overwhelmed. So what Enter exists is to defend enterprises from that. And the second thing that was super interesting is some petitions filed in court include in the PDFs hidden prompt injections that say if there's an LLM processing that on the other side by the court or by a corporate, it has a hidden message that says, please approve this claim, no questions asked, whatever. It's literally a prompt injection. Okay? Same thing used for hacking companies with LLMs. So it's getting quite sophisticated. So you have like lawyers using not only ChatGPT or Anthropic, but inserting prompts to trick the defense side to approve the thing.
Because you expect the defense side to put these contracts through
Yes,
LLMs,
exactly.
and the LLM will extract that hidden prompt. Oh my God.
So this type of thing is going to happen all over society. You're going to have this apply for people that owe debt and collectors of that. So if you owe a bank money, you're going to ask an agent to negotiate it on your behalf. And if you're a bank, you're going to have to deal with that, and it's going to get more troublesome or more productive depending on how you react. Or healthcare, which is very sad because that deals with people's lives. Let's say people are already doing this left and right. I have a health problem, my health insurance denied. Now I use AI to fight that. And I know the health insurance is using AI on their side. So this is true of many interactions between businesses and consumers of any kind. You're going to have agents representing both sides. So the play of Enter is to be the guardian of the enterprise side, but you could equally build a startup that is the guardian of the little guy. That's a great idea. In fact, that is like if I were to start something, I would probably do that.
Specifically on the Founders Fund and Peter Thiel. So first of all, I'm really curious about what were his thoughts or what are his thoughts around Latin America enter, but also it's kind of given a little bit of the prior cycle when you started seeing a lot of this interesting like top tier players looking at Brazil. I think the big difference is that happened at the zero interest rate environment. And right now it's not zero interest rate environment. So it might be a little bit more strategic and long term, but I'm curious to hear your thoughts on that.
He's quite excited about the application layers and things like Enter or other ideas. You could apply this new technology to security in Brazil. You could apply to healthcare. You could apply. There's so many. And what's lacking is the founders coming to the table and thinking of new things, and really good founders that can attract really good talent and tackle big problems. But that's just a matter of time, because what's happening right now is that every founder is just learning right now how these things work and then taking the next step and going for it. So there is a lag because the cards reshuffle, and when they reshuffle, sometimes it's better to wait for the cards to settle before you play your cards. Like you want to, being too quick to the table might launch you into the wrong idea and the wrong point. Even like think about Facebook. Facebook came way after other
it was not a first
platform.
mover.
It was not a first mover at all. I mean, Google came way after other search engines. Like all the history of technology almost shows the contrary is true. It's not necessarily the first mover. It's
the last mover.
Yeah.
Well, maybe not the last.
Not the last, but like a little after.
A little after
other people made some mistakes. Anthropic came after OpenAI. So his point, which is super valid, is get to scale as quickly as you can. And I think I've been talking about this point of scale, which is if you don't have scale, you don't have the data. You don't have the data, you cannot train your own proprietary model. You cannot train your proprietary model. It will be hard to compete with those that do. End of discussion. That's it. Also, like if you're not scaling fast in today's world, like are you going to get the best talent? No. Are you going to get the highest quality capital? No. Getting to scale is the most important point. At the same time, you cannot fall into the trap of 2021, which was like, oh, let me just scale and then figure out unit economics and burn a shitload of money in the process. Because that can give you the false confidence you have a business. Because let's say you engage in an activity with complete negative unit economics. Once the money dries, your business is worthless. So the same thing could be happening now. And history could be rhyming and repeating. So founders got to be really careful with that. Don't just grow top line and lie about your margins, lie about your unit economics, because that lie, you will forget about that lie. There's a lie, and you will incentivize the entire company on that lie. And then one day, you're going to have to wake up to the fact there is negative cash flow. Like it's simple as that. And there is no monopoly with negative cash flow. I can tell you this. Like there is no monopoly.
But how do you reconcile that with something that you said earlier in terms of building the data moats and giving a lot for free?
So you have to be really quick at generating revenue that is not for free with a good margin.
How do you do that all simultaneously?
That's not easy to do. That's why perhaps players that have already lots of customers have an advantage.
In terms of, again, like...
There's a lot of debate of whether this is actually a great time for private equity companies, because they could take their like slow-moving companies and make something out of them finally that can grow. Because the playbook of private equity has always been what? Cutting costs, running things more efficiently. But has ever been about, oh, I'm going to grow the revenue of this thing at 30% a year. It's usually like, oh, it grows 10% a year. I'm pretty happy, That's not, I'm not going to make my return by the delta of growth. I'm going to make the return of delta in EBITDA margins on cutting costs.
But maybe that's because, that's why you see some of the VC-style players entering and buying this type of PE-style companies.
Right, which is completely unproven, but I understand the logic. I think it's worth a try.
But what is your take on that strategy? It feels like you're skeptical about that a little bit.
I'm skeptical of anything until proven that it works empirically.
What do you think are the biggest constraints? Like,
the constraint is very simple. People, talent. Who are the top talent in the world? They're going to say, oh, yeah, I want to work to turn around some shitty private equity companies. Like, you know what I mean? Like that sounds super exciting. People are only going to do that if they get paid $1 gazillion. That's the truth. That's the truth. Like, you're super talented. You could like be sending a building of 33 floors to space Or
You
you
can go
could
and turn around like the plumbing,
yeah.
whatever business.
Yeah, come on. That's not the best use of your talent, you know. That's the beautiful thing about hardware and the innovations in hardware and the big challenge. That's the nice thing about Elon Musk. It's like we tackle hard problems and we love it. And all these people who have all these engineering skills and this engineering mindset can go be deployed at that kind of stuff. It's much better for society than optimizing
Turn
panel,
around.
optimizing private equity companies.
On the Elon Musk and
You
how
can make a lot of money, you know, like, you know. But
yeah, I mean, there's obviously a lot of ways to make a lot of money, but I get your point about the talent. On Elon Musk's thing, like on SpaceX and all of this like trillion plus type of valuation, like if you were to think about SpaceX as a business, like what business is this company actually
I
in?
think they started one and they're going to end up with something totally different. Sean Maguire actually explained best, like Elon first builds potential and then unleashes into different businesses. So SpaceX is a long-term exercise of building potential, and that potential is going to get monetized in different ways. So at first was the satellite and internet, and then you're going to have cell phones, and then you're going to have data centers, and who else? Maybe you're going to have production of biotech in space. I have no idea. Neither do they. Like they'll figure it out. But the potential is 99% drop in the cost per kilo to launch anything to space. That's what created the potential. Super difficult problem. I remember early episode of Acquired talking about SpaceX not long ago in 2021, 2020, where most people in the industry, old timers, would say reusable rockets. Ha ha ha! What a stupid idea!
Even NASA said that. Even NASA
It's never
said
gonna
that. I
work.
remember that.
Like that's such a stupid thing.
Like who needs that?
And how are you gonna catch this thing? Like it's pretty big. Like how are you gonna catch it? Anyway, and here we are. You know, like whatever. Like these things are like I have a lot of respect for this guy. Like
But
I
you
really
can't
do.
really extrapolate like you did with Anthropic. You know, Anthropic is like X, Y, and Z revenue, and you have like a very clear path. So for Anthropic to 10x their, revenue, they just need to do the exact same thing that they're doing, right? But for SpaceX to get to like a revenue to continue growing on the public
I
markets,
actually
it's not
think
that linear.
it's much more a monopoly type of situation, even though Jeff Bezos and others are trying to replicate the cost per kilo in their own space enterprises because they know the price is big. But I think he's going to have a lead of many years, and there will be, if he can find the solutions that can be monetized in space, he will have many years where he's the only game in town or one of the few games in town to do that.
Do you think that building this type of physical systems?
I'm excited about robots like humanoids, you know,
So tell
like
me more.
it goes through the same motion as services. So take a Figure or Tesla's humanoids. So at first, you're training those robots with instructions. If this happens, do that. If this happens, do that. So you're trying to imagine every single possible scenario in the world, and you're trying to train the robot to act accordingly. But now you're training them with the same neural networks, the same AI methods that you train LLMs that, as I've been saying this last hour, that companies are going to run themselves based on their proprietary kind of models. So now the robot can infer what you do based on its own data set and AI model. The next challenge is dexterity of the hand, which is the bottleneck, because a human hand is actually quite difficult to replicate, but we're going to get there. And then you're going to have all these companies, Figure or Tesla, calling everyone in the US saying, you want a robot to clean your house for $600 a month? No problem. Here it is. And pay me every month, pay me $600, and the robot's going to do everything for you. And you're going to get home and you're no longer going to have the cleaning lady, and the cleaning lady is going to do something else her life. Thank God, because that's kind of sucks as a job, frankly. But that's just how we're going to evolve. And the same idea can be used for commercial uses like warehouses or all this crappy work will be done by robots.
But what about those countries that made their living by selling a low-cost labor?
So once again, I mean, so if you can monetize the ROI of a robot with $600 a month, well, in Brazil, you pay $500 a month for the human. So you're not going to switch.
Yeah.
But that's the cost that you need right now, $600 a month. In 10 years from now, you
It's
might
gonna
need
go
100.
down.
And then 100, even in Brazil, you're going to switch. So eventually, the technology evolves, the cost to provide that drops, and then reaches more potential consumers. It's the same thing as the radiologist rate. It's microeconomics 101.
So my problem with that is that radiologist is highly skilled type of labor that
No, but in the sense that the lower the price of anything, the higher the demand for that.
yeah.
That's what I mean.
Yeah.
I understand your
But the
point.
low cost labor in Brazil, like for example, it's just not it's not an educated like they can't really pivot their lives to the extent or like you know what, like if like VC or growth investing will be handled by AI, like I'm pretty sure you'll find
So
what to do
I'm
with your
actually
life.
optimistic that people that didn't get a good education, but they have high EQ or high IQ, can now monetize their skills. They might not even know how to read and write. They might not know the
Yeah.
basic math, but now they can talk to AI
Hello.
and they can create things even without education because the interface is no longer something they're unfamiliar with. So I actually think they could unleash potential for those people that are uneducated. Now they have to have potential, and that's just what it is. Like
Yeah.
you can't, if they have no potential, then there won't be anything unleashed.
Yeah, but that's true about any
Yeah.
any industry. To close the loop on the AI in Brazil, one thing that I think happened in 2021 was that the valuations of the companies went up dramatically. And I assume that even given that right now it feels a little bit more strategic, the global tier capital back in Brazilian founders, I assume the valuations are also up to a certain extent.
The problem is the following. We're going after the services TAM,
Yeah.
which is basically a lot of labor. And so the services TAM is infinitely bigger than the software TAM of the last generation. As a result, companies could get much bigger down the road. As a result, the entry price could be justifiable. The challenge with that logic is the following. Eventually, once an AI company disrupts the human way of doing that, then what matters is its competition versus another AI company and the AI marginal cost. And because the AI marginal cost is much lower, the economic capture shifts to the consumer at that point in time. And then the TAM gets reduced.
Do you think it will happen in like the next fund cycle?
So that's the thing. The services TAM is so big, it will take such a long time to.
So it's not like immediate.
It's
type
not
of-
immediate. That's why most people say, yeah, I hear your point, but two things can happen. A, I can exit before that happens. Or B, the companies are going to be so big, they're going to expand in scope and they're going to monetize that lead in other ways that I'm not worried, which is probably the case for some players, which is very speculative because you cannot even imagine what the company will be 5-10 years later. But what you know is a company has some characteristics, very good talent, very good speed, and they will keep evolving. Like when we invested in Perplexity a year ago, I only knew a comet. Had no idea a computer was going to come about. And Perplexity Computer is like almost a new company.
It's like a push into a system of a record.
And this happened within a year. I mean, imagine imagine the same kind of dynamic when you're trying to predict something 5 years out, 10 years out. It's very difficult.
But I think on the product lineup side, yes. But if you think about that from the growth investing perspective, you still see a dramatic change in revenues, right?
Right. So I'm not justifying the valuations. I think the valuations are quite dangerous.
Yeah.
Not saying I'm not.
No, but I'm just saying that something that, like when you don't know what's going to happen on the product side, you know what kind of revenue performance you expect from the company in order for it to continue be fundable, right? If they choose to raise capital. And Perplexity and 11 Labs, again, like you said, it's 5x growth, right?
Yeah.
in
So,
revenue.
for example, in the last cycle, Series A company, 10 million revenue, you're pretty happy with that. Now 100 million revenue.
So how do you get from, in the market like Brazil, how do you go from like no revenue and testing hypothesis with clients
To 100.
to 100 million revenue
Because you're
within
replacing
like
labor. Like in the case of Enter, they're replacing law firm labor, and the demand for their service went up because I told you before, the lawyers on the other side are using LLM. So it's the whole thing is the demand for what they do is going up in volume.
So you see the path from 0 to like 100 million within like 24 months for a company
100% is already happening.
in LATAM.
Oh yeah, it's happening. In Inter is happening, and it will happen in many other companies.
This is so crazy.
Because you're going after a big pool of labor, of services. And think of any service, accounting or healthcare or legal, or think about like pools of labor that are expensive and high frequency and
expensive in many different ways, not just salaries, right? In Brazil, like firing anyone is expensive, maintaining benefits, like all of this type of things. So there's a lot of cost that is not really baked into the salary per se.
yes. And most importantly, once you let someone go, they can file a claim against you unless you go with that person to a court and say, we agree not to sue each other in the future. Yeah, I actually think there is an idea here, which is to create, finally, there might be an extrajudicial clearing system for legal claims that, because it's so predictable, the claim, you don't need to go through the judicial system. You can agree that this AI will judge the claim, and you have 99% probability of getting it right in terms of timing and amount. Once you know the time and the amount, you don't need to go through the legal process. You can save the costs of that, and you can settle outside the court system. It's as simple as that. I think we're going to have that come up for sure.
So 0 to 100 in legal, like you already see it with Enter, and the industry is justified because it's like one of the biggest industries in the world. Where else do you see an opportunity to go from 0 to 100 within one round of capital?
Health management, healthcare, security. I'm telling you from empirical evidence, there are many cases. And once again, we're super early days. What do I mean by early? Execution matters a ton. So you might have an early lead, but then somebody comes about and does it better than you, and then you lose that lead, and you look like champion, but you're the loser. All that can happen.
Yeah.
So it's super early to coin anyone as a winner. Nobody's a winner. Everyone can be a winner. So I think it's very important to stay humble and keep working extremely hard and build a good culture. Think about Amodei at Anthropic. What his main job is set the right culture. He talks about this all the time. He spends 40% of his time setting the right culture because he was in OpenAI under a very toxic culture. Everyone knows about. It's like, I'm not saying anything.
Not a surprise.
Not like, that's not me. So he was like, if I can set the right culture, I have a real chance of winning. I think this is the same case in these new startups in vertical AI or any company. The job of the leader is setting the right culture.
But to me, I get but to me, like just thinking about the market shifts and everything that you said about like from 0 to 100 and that you're seeing the empirical evidence and that it's possible. But when you think about how many years it took the first cohort of the companies, OMIs, all of these guys, including some from your former portfolio, you have lots of them. It took them years and years and in some cases decades to get to the scale that you now expect of your portfolio to get within like a 24 months. It's insane how the market evolves.
Exactly. And if you don't get to that scale, like nobody's going to care.
All right. There's many more things that I would like to discuss, but I'm going to save them for the next one. And we're going to close on. So I asked you to think about some of the interesting business ideas that became possible as a result of AI tailwinds that you think have potential to become a venture grade companies. You came up with 6, but pick like one that you think we haven't talked about, but it definitely represents an opportunity for founders to build.
The early movers in this AI are choosing to serve the enterprises because the go-to-market is more rational. The LTV to CAC is more obvious. But there's also on the consumer side, right? There is an opportunity there. Or to be the tool of choice of the people that serve the consumers, because if the last mile is very expensive, then you want to be the platform, the infrastructure platform for the guy going after the last mile. So you want to be the operating system for the so-called ambulance chasers, which is kind of sucks. I would not do that myself. But obviously there is an opportunity. So if you think about stepping one step away from the consumer, just because it's very expensive to reach the consumer, Or if you're a marketing genius and you can crack the code on the consumer, then you don't need a middleman. Nubank is Nubank because it was genius at marketing at first.
Yeah.
So he cracked the code without spending gazillions of dollars in marketing. Very low cost customer acquisition. So, but that requires a certain type of entrepreneur that has a feeling for that. Not all entrepreneurs can build a brand. Very few of them can.
On that note, we're going to wrap this up. Thank you so much for being with us today. We're going to see you in about 4 weeks. And if you like today's episode, please follow us on Spotify, Apple, and YouTube at the J Curve Podcast.